Market update here on the 11th. So if you watched the video from yesterday, then you would have seen that this pretty much worked out exactly as I talked about in the video. It was really easy day for me. The only thing that kind of was a little bit off was this dip right here. We had a nice dip here right after the open, all the way down here to like 373, almost a 1% dip. But I was completely fine with that, just knowing that we had created a gap here at 372, and that if this was going to come straight back down here, it was most likely going to be a B wave, and we would still get this move higher later. So it didn't really faze me at all. I stayed in my trades, and this part is actually, in my opinion, maybe the easiest trades to do when it's just melting up like this and you're just watching the VIX. And it almost got to the gap fill, didn't quite get there. Again, looking for 378.38 to, that's the 1.61 fib of this A wave here. And that would complete the overall corrective move. And then the most likely scenario, although I'm not ruling out, there are a lot of different scenarios that could play out. The most likely scenario is after we fill this gap. This is the most basic scenario. CPI is bad, and we go down here and we sell off for the next month and a half, and we get all the way down here to 347. That's the most obvious play that everyone is thinking about right now. Everyone wants to go short. So that is definitely probably the number one option here. But there are a lot of different options here. Another one that's possible that I haven't talked about in previous videos, if this is wave 4 right here, we could be looking at something where this is wave 1 and this is wave 2, and then this is a nested wave 3. So this would be overall wave 1 of 3, and then this would end up being A, B, C down here, and then that would end up being a second wave. So we'd come back down here into this demand zone right here, and then that would be the overall second wave of the overall third wave. And then you're looking at it like this. And then that would only be the third wave. And then we pull back and go higher. I mean, that's not likely in my opinion, but that is a possibility. So you got to watch that. Those are the two main possibilities I see. You could be looking at something where, like this. And if that happens, we'd just be looking at it like a normal flat. So again, this would be A, B, C down here to B wave, and then a C wave higher, and then we'd just be looking at a normal flat. Like that. So don't get too caught up in one possibility. You really just got to play the short term because nobody really knows what's going to happen. And everyone is thinking the first possibility is going to happen. We're going to go down to 340, 350. I guess there are some bullish people too, but for the most part, I think everybody is thinking this is the top right here. We're going to go down, and I still think that we are going to go down. It's just I don't know exactly how it's going to play out. So I would say the two that I just highlighted are probably the most likely. So this, and then we go down, or the 5-wave move down. And the reason I bring up that one too is because I looked at a lot of the tech stocks, and I think that a lot of them have about 2% upside from here. Amazon has 1.8, Apple potentially 2.8, Tesla 6%, Microsoft 2.5%, Meta 2%, Google 2.3%. I'm probably missing a few, but just the general, when I'm looking at these charts, they look like they have more upside than 378. So if this does play out where this is a down here, I would probably expect CPI to be pretty negative, and we'd come down here to 367, and then we would end up melting up here to 385 and then come down. So just throwing all those out there, we'll see what happens. Really the only thing you need to focus on is the short term gap fill here, gap fill here. Are we going to get an expanded flat down here and then go up, or are we going to go ahead and finish this move? So if we finish this move tomorrow, I'd be bearish. If we get an expanded flat here tomorrow, I'd be bullish going into CPI because that'd be a corrective move. So we'd have corrective move, and then we should get an overall, I guess it would be like this. We should get an overall C wave up here after that. So a lot of different possibilities in these corrective moves, but really just focus on the short term because all the other ones don't really matter. Those projections don't matter. And a lot of times those actually just put you into a bias. And for me, sometimes that will cause me to make mistakes like, oh, we're definitely going to go down here. I'm going to buy puts, but I don't have any basis, stop losses, anything like that. So really just focus on the short term, supply, demand, and gap fills. Let's go over SPY. SPY is the same thing, so I don't really need to go over that much. We got 5 waves here. We have potentially A, B, A, B, C right here, gap fill up above, target 449.88, or again, this could be, let's see, here we go, A, B, C, B right here. This is the A wave, B, and a C wave higher. So either expanded flat or we go up here and fill the gap. First thing tomorrow, we might get a little dip and then go higher. And I don't really care which one happens because you know what to do depending on what happens. NVDA is, I was looking at this chart and I think it's playing out perfectly how I drew it up. We have this gap fill down here at 436. A, B, working on a C wave, probably a little bit more downside in the short term. And then from there, it really depends. Was this a wave 1 of 5, or was that the top? If you look at the weekly chart, let's just look at the weekly chart and just see. On the log chart, which is probably more accurate, it does give more upside all the way up here to $700. But on the regular chart, it shows that we are pretty much done, as this is basically the same size as this, I think. Yeah, it's actually gone farther than that. So I really don't care which one happens. We could be finished with this overall third wave. Going back to the log chart. So 1, 2, 3. And if that means we're starting the fourth wave, this could chop around for a while and then slowly make its way down. It doesn't mean that there's not more upside here in the next couple of years, but it would mean there'd probably be a short-term top. It could do, let's say it did top out, it could do something like this though. Just based on what I think the overall market is going to do, it could do something like this. We could get something like that, a big B wave, and then a C wave down like that. So, again, focus on the short term. Gap fill at 436. I expect this to probably hit the 1.61 fib here at 420. So it's got about, let's see, that's about 6-7% lower, maybe. So that's the video. And I'm not looking for upside in that one. So that one does kind of cancel out a little bit of the upside of the other ones I just talked about. But let's look at Amazon. Amazon is putting in a B wave here, and I think it can go to 145. And then I'm looking for a C wave down here to potentially all the way down here to 121, but probably like 127 to gap fill here, the 129 move. That would be the overall fourth wave. And then you got the fifth wave up here to 163. And then Apple, same thing, still has not filled that gap. If this is a wave 1, then I'm looking for a pullback. Did it already pull back to the 0.5 fib? No. So I'm looking for a pullback at least to this gap fill at 181, potentially the 1.61 fib here at 184. That takes it about 2.8% higher. So I think that Apple could, I mean, just showing, looking at that, QQQ could potentially go up to 380 to 382. There's a gap fill at 382. So, but then again, NVDA might cancel out those gains as well. Let's go over Meta. So Meta went higher. I wasn't expecting it to go as much higher, but at this point, it's probably going to 314, which is the 1.61 fib. That gives it about 2% higher. And then that would be the overall B wave. So if it hits 314, then you're looking at right here at that gap fill, 263. So that's Meta, about 2% higher. Microsoft, the exact same thing. Looks to me like it's probably going to do something like that. So that is about 346 is about 2.5% higher as well. And what else have we not gone over? Oh, Tesla, obviously. So Tesla, we get the move that I've been talking about. To me, this move was pretty obvious because we had a gap fill at 290. We got a corrective move here. We got some choppiness here. So I immediately am looking at the 1.61 fib. Immediately looking at the 1.61 fib at 290. And we got that huge move today. And it's kind of funny how the analyst upgrades right at the perfect time. That's why if you read some Elliott Wave books or you use it enough, you start realizing that the chart actually leads the news, not the other way around. People think that the news is leading the chart, but that's also why you get good news and a sell-off, because the chart is all that matters. The news doesn't matter at all. So something to keep in mind if you're trying to do Elliott Wave, like if you watch the news, it really does not matter at all. Just follow the chart. So Tesla, this is my count now. And I think the third wave is probably finished here. So we have 1, 2, 1, 2, 3. So I would be looking for a dip here to 268. And then I'm looking for about 280. That would complete the overall third wave. And then I would be looking for another dip after that to about 272. And then the fifth wave to the 1.61 fib at 290.58. And this will probably happen by the end of the week, unless it gets invalidated. So you're basically just looking at it like that. And you can draw a parallel line here and just kind of get an idea of what day. So Thursday is where it's saying the top of this parallel line. So 1, 2, and 3, 4, 5. There you go. This was very easy to trade today. Once I knew where it was going, I really should have pushed it harder, I think, but oh well. But yeah, great move. Hopefully everyone profited off that and went long. But for the next couple of days, probably even going into CPI, you might see some chop. So even if we come down here and then go up to 280, then you're probably going to see a pullback to 272. It's going to be a lot of chop, so it's probably not going to be a very good trade over the next couple of days. But when we get back down here to 272, you have a chance to go long and probably make another 7-8% on the stock. So this is about 6% higher, and again, once that's finished, I would be all out, because then you're in a supply zone there, and then you're looking at it like this. Could go all the way back down to 200 sometime in October. So I think I went over all of them. I think Google's the last one. So Google, a gap fill about 2% higher here at 140.95. You might be able to squeak out those gains for the fifth wave here, but after that, I'd probably be out of Google. And the VIX, 1381. We have that gap fill here at 1309 specifically. So that's something to watch. If it goes down to 1309, where is QQQ going to go? So I'm not entirely sure if we're going to get that 5-wave move going into CPI. Again, we could get a lot of different things here. Corrective moves are very tough. So be ready for potentially this, or yeah, just be ready for all different situations. Focus on the short term. I'm not going to go over them again, but be ready for CPI. That's going to be a crazy day, and I'll make another video soon. Anyway, if you like the content, then hit the subscribe button. I need to get more subscribers, keep on doing these videos. Hit the like button, and I will catch you in the next video. I'll put the timestamps in the description, and good luck trading tomorrow. It might be kind of a subdued day because we have CPI on Wednesday, but we will see. Look for those gap fills to probably hit tomorrow. All right, have a good one.